good news from the markets. It's been a bright start to the week, Sakshi, hasn't it? Get us all the details.
Absolutely, Rishika. A marvellous Monday really for markets, with both the Nifty and the Sensex surging in trade. Now, of course, what are the factors really for this surge? US debt ceiling deal. One, of course, we saw Asian markets surge before even Indian markets opened in trade, and Indian markets clearly following those cues. Strong earnings, really. Experts believe we've had a strong earnings session so far, a strong earnings season so far, and that's also the reason for this uptake. Now, of course, heavyweight stocks like, of course, Adani Group stocks, banking stocks in particular, outperforming. Remember, we saw the Nifty Bank really outperform and hit a fresh record high right at the opening. We've also seen ICICI Lombard share prices jump after ICICI Bank, remember, has okayed raising stake size in that. And of course, Asian markets is what really started the day off with a bright green tick, and the US debt ceiling deal really being cheered through. So now to decode this further, we have Ambrish Balika, market expert, joining us. Thank you so much for your time, sir. So clearly markets globally rejoicing the US debt ceiling deal.
Absolutely, because I think that was very important for the global economy as well as global markets, because we really could not afford sort of a default in US. And in case that would have happened, I think most of the treasuries across the globe would have been in trouble. So since this deal is more or less done, I think that's one of the main reasons why we have seen the markets shooting up. I think the second reason, like you actually mentioned, was clearly on the earnings, because after a long time, we have seen that the Q4 earnings have been by far quite good. So that's also been cheered.
Right, and your thoughts for Indian markets going forward, sir?
We are clearly in a bull zone right now. I think those levels of 16,800, 17,000, I think that should be forgotten, at least for the time being. And I clearly see the markets moving up. But then, would it move up in one line? I doubt, because we will see some corrections in between. But clearly, we are in a bullish zone.
All right, so we're in a bullish zone going forward. That's, of course, news that we can all cheer. But, going forward, many believe that, look, European markets are yet to open. US markets, of course, shut today. So what your expectations come tomorrow?
Even tomorrow, possibly, we could see the markets holding up. But like I said, it will not be a one-way, one straight move up. We will have corrections. So I see 18,500 to 18,700, 800, where we are right now, possibly be a congestion zone where we could see a consolidation for a while. We could see sideways corrections, and then possibly the market can move further from there. Because we should remember that, when we are talking of doom and gloom across the globe, I think Indian economy would be one of the most performing one, would be a bright spot. So it's quite natural that we will have liquidity coming into the Indian market. FIs have also started investing fresh into India. So that really shows that there's a lot of interest in the Indian market. So because of which I'm saying that we should see much higher levels, but it may not be in one go. We should see some correction in between. And I'll not be surprised if we see 19,500 possibly in the next 3 or 4 months.
All right. Thank you so much for sharing your initial thoughts. So really, Indian markets, the bright spot going forward. That's all from Business News at the moment. Back to you, Rishika, with other news.